Hey everyone, welcome back to channel. If you're new here, I'm your name. And on this channel, we talk all about personal finance, investing, and smart money moves. Now, one question I get asked all the time is, how do I start investing with little money? So in today's video, we're going to break down exactly how you can get started with investing, even if you don't have thousands of dollars to put in. Or is the perfect time to start investing? Whether you've got $5, $50, or $500 to invest, there are tons of opportunities. So let's dive in. First off, let's address why you should even bother investing with a small amount of money. You might be thinking, what's the point if I can't invest a huge sum? Well, there are two big reasons why you should start now, even with small amounts. When you invest early, you're setting yourself up to take advantage of compound interest. It's the idea that your money earns interest, and that interest then earns its own interest. This can have a huge impact over time, even with small initial investments. In fact, the earlier you start, the more you can benefit from compounding. Investing is a habit, and just like saving, the more you practice it, the better you get at it. Starting small is a great way to build confidence and get used to how the market works without risking too much. It's all about consistency. Now let's talk about the different investment options you can explore, even if you don't have a ton of money to start with. I'm going to walk you through some of the most accessible ways to invest on a small budget. First up, fractional shares. A lot of people think they can't invest in popular companies like Tesla, Apple, or Amazon because the stock price is just too high. But with fractional shares, you don't need to buy a whole share. For example, if Tesla stock is priced at $2,500 per share, but you only have $50 to invest, you can still buy a fraction of that share. Many brokerage platforms like Robinhood, M1 Finance, and Charles Schwab allow you to buy fractional shares. This means you can invest in high-priced stocks without needing a large amount of capital. Next, let's talk about index funds and ETFs, which are a great option for beginners. These are essentially baskets of stocks that track a particular index, like the S&P 500. Instead of buying individual stocks, you're buying a small piece of many companies, which helps diversify your portfolio and reduce risk. You can get started with as little as $1 in some cases. And since they track broad market indices, they tend to be low cost and relatively safe in the long term. Popular platforms like Vanguard, Fidelity, and even Robinhood offer access to low-cost index funds and ETFs. Another great option is robo-advisors. Robo-advisors are automated platforms that manage your investments for you based on your financial goals and risk tolerance. Some of the top robo-advisors include Betterment, Wealthfront, and SoFi Invest. What's great about robo-advisors is that they often have low minimum investment requirements, sometimes as low as $5 or $10. They also help you diversify your investments across different asset classes, like stocks, bonds, and real estate. Plus, you don't need to be an expert to use them. They do the work for you. Micro-investing apps like Acorns or Stash are perfect for starting small. Acorns, for example, rounds up your everyday purchases to the nearest dollar and invests the spare change. So, if you spend $3.50 on a coffee, it rounds up to $4 and invests that 50-cent difference. It's a great way to invest without thinking about it. These apps usually have low minimums and are super user-friendly. Over time, your small contributions can add up to a nice nest egg. One strategy I want to emphasize is dollar-cost averaging. This is especially useful when you're investing small amounts over time. Instead of trying to time the market and pick the perfect moment to invest, dollar-cost averaging means you invest a fixed amount regularly, no matter what the market is doing. For example, let's say you invest $50 every month into an index fund. Some months the market will be up, and other months it will be down. But by investing consistently, you avoid the risk of investing all your money at the wrong time. Over time, this strategy can help reduce the impact of market volatility and smooth out the ups and downs. Okay, so you know the options, but how do you actually get started? Here are a few tips to make the process smoother and more successful. 1. Start small, but start now. Don't worry if you can only invest a small amount right now. The key is to start now. You can always increase your investment over time as your financial situation improves. 2. Keep fees low. Pay attention to fees. Many investment platforms offer no-fee or low-fee options. If you're investing small amounts, high fees can eat into your returns over time. So look for platforms that offer low or no trading fees. 3. Be patient. Investing isn't about getting rich quick. It's about building wealth over time. Don't panic if the market goes down in the short term. Remember, the stock market has historically gone up over the long term, and as long as you stay the course, you'll likely see positive returns. Alright, there you have it. Some great ways to start investing with little money in 2024. Remember, you don't need thousands of dollars to begin. Whether it's fractional shares, ETFs, robo-advisors, or micro-investing apps, there are plenty of ways to start building your wealth today. If you found this video helpful, give it a thumbs up, and don't forget to subscribe for more personal finance tips. Also, drop any questions you have about investing with small amounts in the comments below. I'd love to hear from you. Thanks for watching, and I'll see you in the next video.